Hello, this is Mi-jun from Migiko Zion University. Let's start the Mi-jun weekend broadcast for July 12th. As always, we have Chief Executive Officer Kim In-jung joining us on Saturday. Hello, Chief Executive Officer.
Yes, hello, Chief Executive Officer.
Nice to meet you. Yes, as I mentioned just before we started recording, it feels like it's been a really long time since I last greeted you. Since we prepared a lot for the special broadcast last week after it ended, I felt a bit drained and lost some energy.
For a really long time.
I feel like I've been resting. This time, because we prepared a special event and used the slogan lifetime discount, a lot of people signed up not only for the Mijiwon membership, but also for Choice Tagi. You were preparing new features for these people, so if there's any news, please update us again.
Yes, I can honestly say that I've been developing almost only this for the past few months. You'll probably be watching this video on Saturday and then we'll officially open the beta service next Monday. And Tuesday is actually when the earnings season really kicks off. So this is a service that's really needed for the earnings season. That's why we've put a lot of effort into launching it at this time. There's a one-page introduction material that I'd like to show you, and since what's currently available matches well with the current stock prices, I'll explain that screen as well. I'm telling you this because it can really help investors a lot. Yes, yes.
Can you see it? Yes, yes.
I can see it. Apple
News.
opening Apple News. So, this Apple is not the Apple company that's listed on the stock market, but rather an abbreviation for Edgar Flash. That's why we call it Apple News. We created this brand, and as the name suggests, it's a service where we create breaking news from Edgar, analyze it in real time, and provide it to you. It's not just simple translation or anything like that. It actually helps the company, and then we mix it with the data we have. So we don't just use the given information, but we combine it with our own data and use it together. Furthermore, we summarize in one sentence what the artificial intelligence predicts about how this article will affect the stock price in the future. Internally, we also have the scoring points, and we know the exact score. We are considering making those scores public once we have built enough credibility. But for now, when we open the beta service, we won't disclose the scores. It's actually not easy for investors to judge from the news whether this will have a positive or negative impact on the stock price in the future.
So those kinds of...
It's a service that helps with those aspects as well. That's how you can see it. I brought an example. For instance, this is a screen, and when Advanced Micro Devices' earnings are released as breaking news, an article is written like this. Then the artificial intelligence analysis at the front analyzes all of this. So it summarizes the key points of the company and predicts that things like data centers and artificial intelligence chips will have a very positive impact on the stock price in the future. That's how far it guides you. And what's down here is something that people in our country, Koreans, really like. For those who don't like watching long news, 3 lines.
News, so...
It's summarizing the whole news in 3 lines. So the core service and related things are given in just 3 points. If you read these 3, it's basically like you've read everything. If you want to see the full text, you can look below like this. Advanced Micro Devices announced its earnings. Especially the operating profit continues in this way. We've created a terminology database as much as possible and worked together with artificial intelligence to develop and complete these models so that you won't have any problems or awkward translations. Next, this is an article that came out yesterday. If you look here, it says that things have improved significantly in terms of obesity and related issues. The text suggests the product will be competitive in the market, but approval will take 3 to 4 years. It recommends approaching it as a long-term investment. This information was released and received a positive evaluation, causing the stock price to increase by 36%.
Yesterday.
So if you add these kinds of stocks to your watch list, you can receive all this news as FC. That's why we keep telling you to quickly switch to the app. We cannot send notifications through KakaoTalk or text messages, even though some may view this as a step backwards. It's simply not possible for us to transmit this type of information via those channels. There are also a lot of sheep, and for those who are overseas, they can't receive notifications or text messages, so they have to use the app. That's why we've decided to stop providing those services in certain areas and switch entirely to app push notifications. These are the reasons behind our decision. In the long term, the stock price moved by about 5%. Then you wonder why it went up or down. Even single-line push notifications will be continuously expanded and the content will be enhanced over time. So make sure to download the app, turn on push notifications, and log in. This time, the push service makes news available to all our free members, and if you search for a stock, a news section will be created next Monday, and all these things will be included in the news. So the news will become much richer, and this is different from the news you find on places like Seeking Alpha. While places like that have news written directly by analysts, we plan to develop our service by focusing on news analyzed and written based on data, which is our strength. So we've launched it as a beta service, and next Tuesday in July is when the earnings season officially begins. At that time, you'll be able to receive push notifications. If you don't want to receive push notifications at night, you can go into the settings and choose not to get them after midnight, after 1 a.m. or after 1 a.m. in the early morning. If you set it like that, you won't receive any pushes. You can customize all of these options, so I hope you make good use of them. Once the beta service is over and we officially launch the service, the push notifications will only be available to premium members.
That's right, the news.
Free members can still read news, but push notifications are only available to paid members.
Extremely short.
Receiving numerous push notifications quickly causes significant delays. So delivering quickly to premium members in a very short time is our top priority. During the beta, all free members will receive push notifications. After the beta, only paid and premium members will receive them. Other news can be accessed individually. That's all I can say. There's a hot new article that just came out.
I have one.
I'll share a bit more with you. This type of news is crucial and it's vital to check push notifications. I just discovered one. Can you see the screen right now?
Yes, I can see it. MP Materials, MP.
It's called Materials, and if you look now, it's up about 40% in the pre-market. That's right. Then you might wonder, why on earth is this stock going up? So I looked into it myself, and about an hour ago, I saw an article about some kind of partnership. But honestly, you can't really know if this article will make the stock price go up or not, and the article was published just an hour ago. But when I checked our data, it was 7:30 anti-meridian Korean time. The article came out an hour ago in Korea, but for us, based on United States time, it was released about an hour and 40 minutes ago. So that means we were 40 minutes faster than the first article written on YAIOP Finance. This is because even though we collect everything from electronic disclosures in real time, translate it, and mix it with our own data before publishing, there's still this much of a time difference. So if you look here, we've extracted all the headlines for you. Earlier, the English headlines were just about forming some kind of partnership, but we pick out the key points like 10-year rare earth contract with the United States Department of Defense, or secured $1.5 billion investment. This way, we immediately let you know what the core content is.
That's what we do, and
If you look below, it seems that with a turnaround to profit in 2027, we will be able to create mid to long-term growth momentum. So, they're also providing information on how this news will affect the stock price. Then, if you scroll down, it says that according to this contract, the OSTNS journal will increase like this.
this article.
Is not disclosed in the electronic disclosure. The reason we're telling you that we don't simply translate electronic disclosures. We mix together the consensus data we have, the financial score data we have, and the dividend-related data, and use all of that. The news is nearly equivalent to official analysis, providing insights that aid investors in decision-making, rather than being merely translated. So, in order to create a service at this level, we invested a lot of time and effort into this for several months. So, even recently, the reason we temporarily took down the server was because we needed stability to send out these push notifications. That's why we doubled the server capacity and made a lot of hardware investments to make sure you can receive the service stably. So we're going to open this service on Monday afternoon, and since Tuesday is the earnings season, after viewing this video, if you haven't installed the app, please do so. Premium members should install the app and avoid searching for it elsewhere. If you set up this kind of interest information, you'll get a push notification as soon as it comes out here. Then by clicking it, you can immediately use the main content, so I think there's a much higher chance you'll see it much faster than the original articles that come out on Yahoo Finance or similar sites. So through this method, we've already set everything up so that we can continuously accumulate data. And when an article comes out at a certain score level, we can track in the background how much the price has increased on average over a certain period. This service will continue to evolve, and in the future, when an article is published, it will display the data showing the average percentage chance of an increase right on the screen. So moving forward, we'll keep updating things so that investors can analyze investments more conveniently and easily. And as I promised at the beginning, we'll keep working hard to make ChoiceJack a continuously improving service. The introduction was lengthy, but I wanted to explain it well because the service is excellent.
I know, listening to what you're saying, I'm starting to feel a bit of a sense of urgency. Not too long ago, there was actually a huge information gap between what they call smart money on Wall Street and individual investors. So back in the day, if you wanted access to something like Bloomberg's data, it would cost you about 40 million won a month. Yes, for individual investors who couldn't afford that, they basically had to rely on news articles and newspapers for their investments. Also, from the perspective of Korean investors, information about United States stocks was very limited. So as a result, that's why YouTubers like me started to appear. By reading foreign articles and interpreting the original English text, translating and analyzing the meaning, and then turning that into content to share with viewers, that's the role that the Mijun channel played. But recently, since a lot of news about United States stocks is being covered by Naver and various Korean media outlets, I realized that just delivering news content doesn't really serve a purpose anymore, and I became aware of that. So recently, under the section called Mijun's Comment, I read the article and analyze how we should interpret it, what kind of impact it might have on the stocks we're investing in, and I post my personal analysis and opinions along with the article. That's the current role of Mijun. It's the same for the broadcast and for the membership. But seeing you combine Edgar's electronic disclosure with ChoiceStar's data today, and even provide investment opinions, it really makes me wonder what I'm even doing. That's what I'm thinking, because it's written down here, you know. This positive impact is leading to rapid growth in the midterm and influencing investment opinions, making everything happen very quickly. As soon as the electronic disclosure comes out, it's immediately summarized, organized, and analyzed thanks to the power of artificial intelligence, and content is created from it. So I think it's gone beyond the realm of content that humans alone can produce to some extent. I think I need to think about it a bit more.
I don't think we can keep up with artificial intelligence when it comes to simple production and things like that. So I often use cooking rice as an example. We don't really compete with electric rice cookers to see who can cook rice better, right? I think when they first came out, there might have been some competition. I used to say I can cook rice better with a pot. You use the electric rice cooker by lay, but now no one competes with rice cookers anymore. Instead, we focus on what the electric rice cooker can't do. When it comes to cooking something or creating something new, I think there are still areas that only people can handle. For example, when Chief Executive Officer Oh An-im gives insights or shares something valuable like that. We need diverse perspectives, as artificial intelligence doesn't always have the correct answers, in my opinion. So, there are various experiences and different exposures, and from that perspective, I think the value of content that tells us how someone views this content will keep increasing. So, among the flood of content, when I look at what I choose, like you, Chief Executive Officer, you also tend to curate content like this. Well, this seems really important today. But artificial intelligence doesn't do this for us yet. I mean, if you ask it to summarize, it gives you something, but I don't really think it provides any real insight. Right now, I think there's still a lot of value in what you do. Watching the important news in the video and sharing it. I believe this will likely remain valuable for quite a long time. I also think about those concerns a lot.
But on the contrary,
with the help of artificial intelligence, I could actually provide a bit more insight. If you just think of it as having a wider variety of raw materials as sources, your insights and the content you provide will become even better than they are now.
Thank you for your comforting words. From now on, since I'll have more content to use, I think I'll need to run broadcasts and manage the membership while looking at the reports that are uploaded to Choice Stage. Then I'll wrap up the big Choice Stage update news here. Now we're going to officially start the United States Stock Elementary School segment. Today is the last session of the cash flow statement that we've been studying for a while.
Yes, up until last time, we talked mainly about things like depreciation in the operating activities section of the cash flow statement, but today we're going to focus on the most important thing you need to look at in the cash flow statement. I'll talk about two things, and then we'll see what you can do by looking at the cash flow statement. I've summarized it into 3 points. First, it's very useful when identifying early stage growth stocks, and I'll tell you what steps you should take for that. Second, it's not an early stage growth stock, but it's a company that's planning its next move through large scale facility investments, something like that. How to get hints from the cash flow statement and start analyzing companies that are kind of crouching down to jump, where their performance is also subdued, but they're preparing to leap forward. Second, and lastly, I'll talk about how to identify companies that are either insolvent or suspected of accounting fraud, where you think, there might be a possibility of window dressing here. I should take a closer look. I'll explain these 3 points so you can manage risks a bit better.
Great. I think a lot of people will be especially interested in how to discover growth stocks. Second, let's standardize the terminology. We'll call these somewhat dormant growth stocks sleeping growth stocks. Sleeping growth stocks, that's good. Then the content you've prepared.
Please go ahead. Today, I'll talk about some practical ways that can really help you in real situations. Last time I said there are 3 things in the cash flow statement, but to understand it, you must grasp 2 key points. The first thing is that there are these 3 types of cash flows, and it's very important to understand when they occur and what kinds of activities or actions by a company cause the cash flow from operating activities to happen. So the first thing I mentioned, operating activities and cash flow, is related to the main business. When we talk about operating profit, that's also related to the main business. Just like non-operating profit refers to profits or losses made from activities outside the main business, when we talk about operating activities, anything with operating attached to it means it's related to the main business. So any activities where the company generates profit from its main business and creates cash flow from those activities are considered operating activities and operating cash flow. Please understand it this way. The second is investing activities cash flow. To put it simply, it's good to remember it like this. If a company spends money on something for growth, that's considered investing activities cash flow. So investing activities cash flow is basically about the future.
It's an investment for the future.
So if it was an investment for growth, we call this investing activities cash flow. Just remember that. There will be a quiz on the next page, and to solve the quiz, you need to remember what kind of activity this is. The third is financing activities cash flow. Financing activities cash flow is about raising the funds a company needs or operating the funds that have been raised.
When raising or having raised funds,
When we operate that money,
we call this activity a financial activity.
it's called cash flow. What we need to remember is that the cash flow statement includes operating activities, investing activities, and financing activities. Operating activities refer to the cash flow generated from the main business, and investing activities refer to the cash flow that comes in when investments are made for growth.
The cash flow of something.
That's what we're talking about. Cash flows from financing activities are related to raising funds or managing those funds. That's what cash flows from financing activities are. It would be good if you understand this first. Moving on, the second important thing is that interpreting the signs is key. If you just know how to interpret these signs and when they occur, as I mentioned earlier, you'll have the basic understanding needed for all the accounts listed in the cash flow statement. So to sum it up in 2 points, if there's a plus sign in front of a value in the cash flow statement, you can understand it as money coming into the company, cash flow coming in. It's simple, right? If money comes in, it's a plus, cash increases, so it's a plus. On the other hand, if there's a minus sign in front of the cash flow, it means money has flowed out of the company, so cash has decreased. That means cash has been paid out from the company, so you can understand it that way. It's really easy, right? Since it's easy, shall we quickly solve 4 quizzes together? The first one is that Micron Technology invested $1 billion in a semiconductor factory. That's what it says. Then first, you need to decide whether this is sales, investment, or finance like we talked about at the very beginning. Right, is it money earned from the main business, an investment for growth or fundraising? Since the first one is an investment in a semiconductor factory, which of the 3 do you think it is?
It's an investment.
They must have made an investment. For now, I'm saying that this activity must be an investment activity. When you decide to invest, what happens to the cash? The cash goes out, right? When the cash goes out, it becomes a minus. So how does this work? You write minus $1 billion under investment activities. So if you see minus $1 billion in cash from investment activities, how should you interpret that? It means that this company spent $1 billion for growth. So the reason we look at financial statements is to infer what kind of activities or decisions were made by looking at these numbers, or to understand the chief executive officer's true intentions. That's what we're looking for. Second, I wrote down the name of a stock I mentioned earlier. This is not actual news about the company.
The stock name is just random.
I just wrote one down. Asutra Rebsa decided to borrow $2 billion from the bank for M&A to help the company grow. Then among these 3, 1, 2, or 3 are viewers, Misuchos. Try to guess as well. Which one do you think it is among 1, 2, and 3? Since they're raising funds, it must be number 3, right? This must be a financing activity. Since they decided to borrow from the bank, since they decided to take out a loan, will cash come in or go out? Since they borrowed money, cash will come in, right? It's simple. Financing activity plus $2 billion in cash flow. That's how you write it down. So when we see this number in the future, what should we think? It means the company raised $2 billion through borrowing or issuing new shares. That's how we interpret it. It's pretty easy, right? Next, third, Apple carried out a $1 billion share buyback this year. They bought back their own shares, so it's not their main business, nor is it an investment for growth. This is about managing the cash flow they have after raising funds. So when they do this and buy back their own shares, they have to use cash to buy their own shares from the market. So don't just think of it as a plus when they buy back shares. You should always look at it based on cash flow. Since they have to pay out cash, this is also a financial activity. And because the cash decreased, you write it as minus 10. And if you've followed along up to these 3 problems, you've mastered the basics of the cash flow statement. After that, when you look at the cash flow statement, you'll be able to see things much more broadly, and you'll be able to interpret it. Next, this last case shown by Monday.com is a bit of a unique case. There was a bond that they owned. Here, when the bond matured, they received $300 million. So since they received $300 million, cash came in. Since it's cash, it must definitely be plus $300 million. Now, what kind of activity would this be? That's what we need to decide. This isn't cash earned from their main business, right? So did they manage funds? It's not that. If you look here, it's an investment for growth, but among them, there was one more thing I had here. It's called marketable securities. So when it comes to investments, there are facility investments and marketable securities investments. So there are cases of short-term investments, long-term investments, and investing in assets. Buying bonds is an investing activity, not a financing activity. For example, investing in a money market fund, the profit varies based on price fluctuations of marketable securities, and you get your money back at maturity, like when a bond matures. In the end, this is recorded as 300 million won of cash coming in from investing activities. The reason I brought up this example is because most of the cash flows from investing activities are negative. Naturally, for a company to grow, it has to keep making a certain amount of cash investments. But sometimes all of a sudden a very large amount comes in as a positive from investing activities.
Then suddenly,
It gets confusing. Did this company withdraw its investments? Why is money coming in from investing activities? There are two cases like this. One is when they actually withdraw and dispose of all their investments to recover the money, but this usually doesn't happen unless the company is shutting down or selling off a business division. So when you see a positive cash flow from investing activities, you can assume that over 90% of the time it's due to the cases I just mentioned. That's when the bonds or investment products the company invested in mature or are cashed out early and the money comes in. How do you record that? You record it as cash inflow from investing activities. So even if you see a lot of positives in investing activities, there's no need to worry too much about it. And when this investment money comes in, what do you think the chief executive officer will do? The investment has matured. They'll likely reinvest the money into another product with a new maturity date rather than storing it in the company's safe. So, as the securities increase again, the cash flow from investment activities will go back to being negative. That means temporarily, during the settlement period, when the maturity comes in, you'll see a positive cash flow, but most of the time it's negative. That's how you should understand it. I mentioned this last time, so I'll just touch on it briefly and then move on. I mentioned that the cash flow from operating activities is the most important, and the formula for calculating this cash flow starts from net profit for the period and goes down like this. So the operating profit or net profit that a company actually earns includes some items that are not cash, even though we record cash in the cash flow statement. In net profit, there are things that are added or subtracted that aren't actually cash. What we're saying is, let's adjust these items to convert net profit into cash flow from operating activities. So we start from net profit, and the most representative example is depreciation expense. I mentioned this last time. It's something that goes out in installments. So when you buy it, all the cash goes out at once. But for expenses, you spread it out over the useful life. So even though the expense reduces net profit, in reality, no cash actually goes out for depreciation. That's why, when calculating cash flow from operating activities, you add back the amount of depreciation expense. I mentioned that we add back non-cash expenses, and in Korean financial statements, this is referred to as virtual expenses with no cash outflow. The second one, which we've seen in many examples and I'll cover more later, is non-cash revenue. This means revenue that appears as operating income on the income statement, but in reality no cash actually came in, so we need to subtract it. You just need to know the most common examples of non-cash revenue. Fair value evaluation, when the value of stocks, bonds, or options that a company holds changes, gains or losses from these evaluations occur every year when they are assessed. If the price goes up, an evaluation gain occurs, and if the price goes down, an evaluation loss occurs. These are reflected in the non-operating income and expenses section of the income statement. But in reality, there isn't any actual cash flow coming in. It's just on paper, just an accounting evaluation. So that's why we take it out again. Next, the last thing I mentioned last time is the working capital that occurs when running a company. When you buy raw materials.
Inventory.
Assets are generated when you buy raw materials without paying, creating accounts payable. Selling without receiving cash generates accounts receivable. It's the change in assets from when cash is paid out until it's received back. The increase or decrease of these three things, which must exist as assets for the company to keep operating, not driving but walking, these three things are essential for the company to function. When accounts receivable occur, if you had 100 billion in receivables and paid off WT20 billion to a company in advance, your accounts receivable would decrease to 80 billion. Paying doesn't guarantee increased sales. Since the sales are already recorded, you must adjust the 20 billion won. By adding or subtracting those changes in working capital as they come in, we arrive at the final cash flow from operating activities. So up to this point below, it's about halfway through the process.
The beginning is...
It's okay if you don't fully understand yet. But business activities are about turning net profit into cash. So in a way, it's a bit similar to earnings before interest, taxes, depreciation, and amortization. In earnings before interest, taxes, depreciation, and amortization, the depreciation and amortization stands for depreciation and amortization. And since you're adding that back in, it's similar. But to be more precise, I personally think that cash flow from operating activities is a better indicator for checking a company's cash flow than earnings before interest, taxes, depreciation, and amortization. So I think that's about all you need to understand about cash flow from operating activities. Then let's take a look at Microsoft's actual cash flow and think about what we've just learned. We're looking at what activities it engaged in, so we're looking at these three things. Operating activities are the main business. If you look at Microsoft from 2016, they earned $33 billion, $39 billion, and so on. So now they're generating $118 billion in cash flow from their main business. It's an incredible company. You can conclude it's a good company without even looking at the financial statements. Next, look at the investing activities. You see all those negatives in front of the investing activities. Negative, 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 right? Right? So, this means the company is investing for growth. What's important here is to pay attention when the amount suddenly increases, because for a company to grow, they usually invest a similar amount regularly. But when it suddenly jumps, look here. As of June 30, 2024, investing activities abruptly reached $96.9 billion on an annual basis. Before that, they were investing around $20 or $30 billion, but suddenly Microsoft invested $96 billion. That's an enormous amount. So we need to look at where they invested this money. I mentioned earlier that there are two types of investments. With cash from investing activities, you either invest in tangible assets like facilities or you invest in securities. It's one of these two. Then, if you look at the balance sheet and check whether this increased or that increased, you can immediately see where the money was spent. So, you should look at this in connection with the balance sheet. That's why it's correct to view the balance sheet, income statement, and cash flow statement together, not as separate screens. The financing activities show a negative $37 billion. This indicates that the company either took on debt or bought back its own shares, amounting to approximately $37.7 billion during this year.
Spent. That's quite a lot.
It's a good company, you can judge it that way. To calculate the indicator below, take the cash flow from operating activities, 118, subtract investing activities, financing activities, and the effect of exchange rate changes to arrive at this precise amount.
And that's how it's done.
This amount is the actual increase or decrease in Microsoft's cash for that year. So here, even though they earned $118 billion from operating activities last year, because they increased a lot in investing activities, their cash flow was a bit lacking. The change in cash indicates that their cash holdings decreased by approximately $16 billion. So this change in cash, if you look at the balance sheet later, there's a section called cash and cash equivalents under assets. This is the accumulated value in those cash equivalents. This change in cash is for 1 year. If it's positive, it adds to the cash equivalents and increases them. If the change in cash is negative, the cash for the next year decreases by that amount. That's how it works together. So what is recorded here is ultimately connected directly to the balance sheet. That's the kind of flow it has. So you can look at these numbers like this, and then if you look at the very bottom, there's something called ending cash. So this is what we call free cash flow. Free cash flow is the cash flow that a company earns from its operating activities, and besides investments for growth or the future, of course, money also goes into maintenance. The money spent to maintain the current size and the costs for new investments are both called capital expenditures. The amount left after subtracting these capital expenditures is called free cash flow, or free cash flow in English. So when we talk about valuation and we say discounted cash flow, which stands for discounted cash flow, we mainly use the cash flow from operating activities. The method of valuing a company by discounting free cash flow is about using this surplus cash. That's how valuation is done, yeah? But do individuals really need to know all this? I don't think it's necessary. So some of you might have started to look a bit worried while listening, but you don't need to do that kind of valuation. Because, first of all, predicting future figures like free cash flow is much more difficult than predicting expected earnings per share. Depreciation expenses, changes in investment asset valuation, and working capital adjustments are values that require precise calculations. But if you can't even accurately predict a company's sales and profits, how can you get operating cash flow and free cash flow, right? Projecting the next 5 or 10 years and then discounting the total amount to present value is academically perfect. But in reality, I don't think it will be of much help when actually investing. So it's okay if you don't know it well. It's good to understand the principles behind things like discounted cash flow. But when it comes to valuation, you don't have to break it down and use your own valuation method. Next time, when I cover the basics of valuation in the United States Stock Beginner series, I'll talk a bit more about those parts. So you can understand that Microsoft is structured in this way. If you want to see the actual financial statements of the company, let me enlarge the screen and show you where to look. Usually when you invest, you rarely look at the cash flow statement, but after today's lesson, you should be able to read the cash flow statement as well. So, if you look here, you can see the most recent data. This company, Microsoft, generated about $130 billion in cash flow from operations, spent $56 billion on investing, and $64 billion on financing activities. So the cash,
The change in cash is
it decreased a lot, and after investing about 163.8 billion won earlier, now the cash is increasing again. If I may add one more thing about this surplus cash I mentioned earlier, in the case of Buffett, he evaluates a company as having tremendous competitiveness if the free cash flow ratio, that is the free cash flow to sales ratio, exceeds 10%, meaning it's in double digits. Since free cash flow is the amount left after deducting all these capital expenditures, it has to be much smaller than the actual cash flow. So, if a company consistently maintains this ratio above 10%, and if it reaches 15%, it's considered so important that you could just buy it for the long term. Then, let's take a look at this company we mentioned earlier.
investment activities in 2024.
Shall we look at it based on this? I told you that if they did a lot at this time, investment activities are one of two things. Examining the company's assets, there's no change in short-term investments and almost no change in long-term investments, regardless of whether tangible assets, intangible assets, or long-term investments increased. Then it's clear that they didn't raise money to spend on investment securities among investment assets. The second is either tangible assets or intangible assets among these.
If you look here, tangible assets are
Right now, from $110 billion here, in the last 2 years, it has become $200 billion. They poured $100 billion into tangible assets. Intangible assets have doubled primarily from M&A activities to expand the company. The remaining $100 billion was invested in tangible assets. So because this company provides cloud services, they need equipment, facilities, artificial intelligence data centers, and so on. It requires a huge investment. Because this investment is necessary to make money, in the case of Microsoft, they're putting a significant portion into investments right now and preparing for the future. That's how you can interpret it. So if you look at the financial statements or data in this way, I think you'll be able to understand them much more easily.
The start of a dream matters now. Let's plant the seeds of a hopeful future together. Growing little by little every day, is there excitement blooming in your heart? Let go of your greed, this time won't be any different. The result is just a continuation of the process. Even if dark adjustments come, I'm not afraid. I'll hold Miju's hand and move forward, becoming the light of an unseen tomorrow. A happy investment, cheering on each other's dreams. Let's walk together down this beautiful downhill path. A happy investment together with Miju until the day we all boldly retire with Korean stocks all together.